Good morning, hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and with over the next half hour, we will help you navigate the markets and today's trading session with some actionable ideas, strategies and of course answering your queries as always. But before we kickstart the show, let's see what the global handover looks like. It was a somber start to September. European markets did shut shop lower as they made a negative start to the trading month. Stock 600 closed 1.8% lower. With all sectors ending the day in red, all major bourses in the Eurozone ended with cuts of over 1%. On Wall Street, Dow S&P 500 closed higher to snap 4-day losing streak, but Nasdaq clocks a 5-day losing streak for the first time since February. Asia markets trade mixed as we speak ahead of the US jobs report. SGX Nifty, meanwhile, is up 0.7%. While our own markets ended in the red yesterday, the auto sector bucked the trend. We take stock of wholesale volumes for the month gone by and key commentary from OEMs. Stocks in the spotlight are Aurobindo Pharma, Dodla Dairy, Route Mobile and Vijaya Diagnostics. All right, let's get going and bring on board my colleague Nitin Agarwal from MC Pro to talk about the auto sector first and foremost, top of the show. Hi Nitin, good morning and thank you for joining in. What explains the outperformance in the auto index, individual auto stocks as well, many of them trading at record levels still? Were the numbers that good or are there more triggers at play?
Definitely the auto sector is coming out of a lot of challenges that it has been facing for past 6 months to 1 year, primarily on the back of severe shortage of semiconductor chips and spike in the raw material prices. Now, coming to the auto numbers for this month, I think the numbers are very, very good for the companies, all of the auto majors, especially for the two-wheelers and the passenger vehicle segment, which had been struggling due to the semiconductor chip shortage. If you talk about Maruti Suzuki number, it posted a very decent growth on a month-on-month basis, on a year-on-year basis. Its passenger vehicle segment grew by around 39.7% on a year-on-year basis. UV segment also recorded a growth of around 10.7%. Talking about the Tata Motors, it recorded a growth of around 68.3% on a year-on-year basis. Now, coming to two-wheeler segment, the two-wheeler segment, which had been struggling primarily because of the chip shortage and the weakened demand scenario, but has picked up now. Talking about Bajaj Auto, which has recorded a growth of around 49% on a year-on-year basis. In fact, if we look at the month-on-month basis, also it recorded a growth of around 42.3%. Hero MotoCorp, which is a leader in this segment, has recorded a growth of around 5% on a month basis. So overall, the scenario looks very, very promising going forward.
Does the scenario look good for passenger vehicle companies like Maruti, M&M, or does it look like a broad-based upward trajectory is set for all the companies, whether it's two-wheelers, trucks, tractors, all of them?
Well, what I believe now, the scenario is very, very encouraging for all auto majors. As I highlighted earlier, the biggest challenge for the auto companies was the spike in raw material prices and the shortage of semiconductor chips. If we look at the commentary from the various management, we see that the companies have identified alternative sources of supply of the semiconductor chips and the raw material prices are also have started softening. So we believe the scenario looks very promising. In fact, the festive season is around the corner. So the management of Mahindra & Mahindra has indicated that the tractor sales is expected to grow. In fact, in this month also, Escort recorded a growth of around 12.8% on a month-on-month basis. So the scenario is very promising for all the auto majors as of now.
Okay, all right. But if we talk about auto stock performance as well, it has been very, very encouraging, very impressive as well, because when the markets were undergoing a downturn, auto stocks surprisingly showed a lot of resilience. But the question now that a lot of retail investors, a lot of people who track the space are asking is, has it peaked or is there more steam left for these stocks to rally, especially those who want to enter at current levels?
Karunya, as we know, the stock market factors in the future. So stock market was pretty much expecting the auto companies to come out of this downturn. Downturn as the raw material prices were softening. So they have spiked up despite the weakness in the broader indices. So what I believe that this is just the start of the uptrend and the rally that we are going to witness in the next 1 to 2 years. So we believe that the companies are yet to reach to the level where we can see the valuation at the elevated level. Currently, we see the valuations at very reasonable level for major auto companies. For example, Maruti, the valuation is still very reasonable, primarily because of the stock had corrected significantly earlier, but now it's going up. On the other hand, what we believe that Bajaj Auto is also is another candidate where the retail investors can look into. This is also giving a very good returns for the good returns and good recording a good growth, as is evident from this month sales number as well. So overall, what I see or what my analysis is that there's a strong rally is expected to come about in auto stocks.
Okay, what about auto ancillary or some of these, especially some of these ancillary players who have started supplying to EV companies as well? Is it a good time to look at them as well, or is it largely the OEMs that you are more optimistic about?
Well, if we look from the investor's point of view, we see the delta is much higher in case of the auto ancillary companies because they generally tend to outperform the auto OEMs, primarily on the back of the strong growth that they record. So one of the major challenges that auto ancillary companies were facing was the production cut by OEMs and hence the degrowth and the muted growth in their demand. However, since the OEMs have started increasing the productions with the ease in supply of semiconductor chips, many auto ancillary companies are witnessing a strong demand. Some of the companies that I would like to highlight here are the Minda Corporation, Motherson Sumi Wiring India Limited. These are the companies where there has been a strong growth. And if we look at the two-wheeler auto ancillary companies such as Gabriel India and Subaru Limited, these are the companies which are going to definitely benefit from the strong growth that the two-wheeler OEMs are witnessing currently.
Okay. Nitin, do you want to flag off any downside risks as well if the scenario doesn't play out as expected and there are more economic downturns or there is commodity price escalation as well? Because right now we are amid a very uncertain scenario when it comes to global supply chain, especially given that there is still no clarity on the Russia-Ukraine situation either.
Well, definitely the auto companies which have major exposure to the export market, primarily to Europe and other geographies which are facing macroeconomic challenges, then we definitely can see downside. For example, Sona BLW, which supplies to Europe, and the energy prices are spiking up, causing the increase in the raw material cost or the overall cost for the companies. Bharat Forge is another example which is also facing challenges in those geographies. So all the companies which have major exposure in the export markets may see some turbulence going forward. But overall, what we believe that the risk that is there in Europe and in US as well is going to be short-lived, as the Bharat Forge management also indicated that if there is a recession in US and Europe, then it could be very short-lived, but we are very well placed to take the advantage of that situation as well. So there could be turbulence on the back of the energy crisis, on the back of a spike in raw material prices, but if we have a long-term view from, so say 1 year or 2 years, we are well placed right now.
Okay. Nitin, since I have you here and since you also track aviation, can you give us a sense of what's happening, especially in the SpiceJet stock, which crashed yesterday after weak numbers, widening losses, their CFO has quit. So overall, how is it looking for the aviation space?
See, in aviation, I prefer only one company, which is Integro Aviation, primarily on the back of its ability to run the operations at a very low cost, and it has a very, very strong balance sheet. On the other hand, if we see SpiceJet has been struggling on the back of cash crunch for last since the COVID hit the world. So the SpiceJet continues being struggling. They have been delaying the payment of their loans. They have been delaying the salaries of their employees, and they are not spending on the maintenance. In fact, if I remember correctly, last month DGCA has come out with a notice to them that they need to maintain their planes, and they are struggling there as well. So, but in the entire space, what we believe and very confident about the Interglobe Aviation, as the demand has picked up quite significantly, people are shifting from train travel to plane travel, primarily on the back of the reduced time and the any fear of COVID. And this has become the habit for Indians now to travel by aeroplane. So if we look at the last quarter numbers and the monthly numbers, their demand continuously going up. In fact, their yields are also improving quite significantly. The management is very quite upbeat about the fact that they will be able to maintain their yields and they would be able to grow at a faster pace. Apart from that, what can provide a key trigger to Indigo is the international flights. They've resumed the international flight and have reached to pre-COVID level, barring one or two destinations. So those are the high value products, as we say, for the company, and we believe the Indigo is definitely there to touch the new altitude going forward.
Okay, well, that sounds very encouraging. But the recent uptick or the increase in ATF export duty, does that impact their financials at all?
It does a little bit, but what they have been doing, their revenue management system is so strong that they have been able to factor in. If we, as a passenger, we also see that the prices are going up, but we see no decline in the demand currently. So the price elasticity has improved quite a lot. The customers are able to absorb the prices, and hence the company is not witnessing any kind of pressure in the financial performance. In fact, in the last quarter also, where if we compare it to the same quarter last year, the raw material prices spiked up quite significantly. So to say, the oil prices spiked quite significantly, but company was able to pass it on to the customers, and they were able to manage their revenue and their EBITDA margin quite well. So we don't see much of the impact going forward in that case. In fact, what we also believe from our oil analysis is that we have kind of stabilized. Oil prices are kind of stabilizing around $100 per barrel, which is pretty okay for the Indigo right now, given the strong growth that they are witnessing and the strong cost management that they have.
All right, Nitin, thank you so much for talking to us in detail about what's happening in the auto space, and not just that, but also the big trend in aviation space, and he's given a big thumbs up to Interglobe Aviation. All right, let's talk technicals. Let's welcome on board Nilesh Jain from Centrum Broking. Morning, Nilesh, and thanks for joining in. What should we expect in today's trading session then? How are the cues looking, and what is SGX Nifty telling you?
Hi, very good morning to you, Karunya. Well, see, from last week on today's session, if I put it in that way, in this week, we have seen a lot of volatility. We started on an extremely gap down note, and post then we have seen a good recovery. And looking at the overall structure, I believe that there could be some sort of a consolidation in the broader range of 70,300 to 70,800. Whichever side it will break, we can expect further momentum of another 300 to 500 points in that particular direction. But as of now, looking at the overall structure, I think today we can expect some sort of a consolidation. The global cues, although are not that supportive, but few factors are in favor of the Indian equities, like Brent crude, which is continuously falling. Gold has fallen, but the only concern as of now, I think, is that the dollar index, which has hit all-time 20-year high. So that is the only concern that we have. But overall, I believe once this consolidation gets over, we are likely to break the levels of 18,000 on the higher side and inch towards its previous all-time high levels of 18,600. But for the day, we can expect some consolidation in the range of 7,400 to 17,700.
Okay, we'll very quickly address the stocks that are likely to be in the limelight today. The first name is Aurobindo Pharma. Its subsidiary Curatech Biologics has expanded its operations by establishing another mammalian cell culture manufacturing facility. The expenditure for ramping up capacity is around 300 crores that the company will be investing via this arm. Talk to us about Aurobindo Pharma. I mean, yesterday on the show we discussed the prospects of Cipla, Glenmark, wherein the techie was quite bullish on them. But is Aurobindo's chart also looking equally upbeat?
No, certainly, Karunya, if you look at the overall structure, Aurobindo Pharma is not that convincing. It is, in fact, continuously forming a lower top and low bottom formation on the weekly time frame. The overall structure hints that even if we see any pullback, that should be utilized as an exit opportunity or as a sell opportunity. Because in this space, if somebody wants to play on the long side, I would still like to go with Cipla, Sun Pharma, and Divi's Lab rather than Auro Pharma. So it's an avoid from my side. But if somebody is holding, then one can keep a stop loss below 520 for the long position. And any breakout above 600, then probably we might see a buying opportunity. But as of now, it's an avoid.
Okay, all right. Next up is Route Mobile. The promoter of the company has offloaded 1% stake in the company. The promoter's name is Sunita Sandeep Gupta, and she sold 6.75 lakh shares via market transaction at an average price of 1432 rupees per share. How's it looking on the technicals? The selling price has been way below where the stock is actually at 1465. Tell us from these levels where it is headed.
Seen a bottom formation near about 1060. A double bottom can be seen on the daily time frame, and since then we have seen a gradual up move. A high top and high bottom formation can be visible on the daily time frame chart, and the overall structure hints that definitely there will be a gradual up move, and going forward we are likely to see the levels of 1600 to 1700 in the short run, and the stop loss should be placed below 1400. If somebody wants to initiate any fresh long position, I think at current level can be initiated at the long position. On the higher side, the immediate target, as I mentioned, I'm expecting of 1600 to 1700. But yes, one should have a positional view in this particular counter with a time horizon of 6 to 8 months. Then probably we are likely to see the levels of 1900 to 2000 as well.
Okay. The third and final stock that I want to flag off today is Dodla Dairy. Investor TPG Dodla Dairy Holdings has sold 1.7% stake in the company. Meanwhile, Ashoka India Equity Investment Trust has bought 5.1 lakh shares at an average price of 509, and India Acorn Fund has bought 3.2 lakh shares again at the same price. The stock yesterday shut shop at 547 apiece. In fact, it's at a multi-month high. Talk to us about what's next for Dodla Dairy.
Certainly, it has hit a multi-month high, and after almost a span of 7 months or 8 months consolidation, we have seen a good breakout. The only concern that I see in this particular counter is that the lack of volatility, lack of liquidity, and the volume is very less. Yesterday, although we have seen a price and volume breakout, but I would still prefer to stay away from this particular counter because the volume activity is very low. But technically speaking, looking at the chart pattern, yes, the counter looks positive, and we may see the levels of 580 to 600 in a very short run. Looking at the yesterday's candle, I think the breakout is very good, and if somebody wants to hold it for a longer run, then definitely 650 to 700 could be visible. But only due to less volume and less liquidity, I would advise to stay away from this particular counter.
Okay, then. Very quickly, let's address a couple of queries as well before we ask your picks. The first one I want to address is from Krishna. He wants your view on Larsen & Toubro. Talk to us about this heavyweight stock and what lies ahead.
L&T, in fact, we have seen a pennant sort of breakout on the daily time frame chart. Yesterday, it has retested those levels. I think technically looks positive. And going forward, very soon we are likely to see new all-time high levels in this particular counter. The immediate resistance is placed at 2000, so definitely one can add this particular counter on decline. Those who are already holding can continue to remain long for the upside levels of 2000 and 2100. The stop loss should be placed below 1840.
Okay. The next query is from Sagar, and he wants a short-term view on Aarti Industries. Tell us, what is the chart indicating?
Aarti is looking very positive on the chart. In fact, that was the counter that I wanted to discuss, but I'll give my technical view on this particular counter. Overall, chemical basket is buzzing. Yesterday, we have seen a good amount of attraction, and the chemical space is looking positive from a short-term perspective. Maybe from a next 2 to 3 months perspective, we can expect chemical space to outperform. And looking at the overall chart pattern, I think 900 should be the immediate target in the short run, and positionally it is heading towards 1000 mark, and the stop loss should be placed below 770.
Okay. Trilok is writing to us live on our feed. He wants your view on Nelco, and this one has been hitting quite a few record levels of late. Will that winning streak continue?
Yes, certainly looks positive. We have seen a good breakout, and it is one of the outperformer. And looking at the chart pattern, it looks like it is heading towards 1200 mark. So slightly from a positional perspective, one can definitely remain long. Stop loss should be placed below 990.
Okay, well, that's the verdict on Nelco. Moving on to the next and final query. It's from Aditya, and he wants your advice on Tata Elxsi, which is perched at 9,012 rupees, just above that important level of 9,000 bucks. Talk to us about the technicals of this one.
Tata Elxsi has been in a secular uptrend, and it has respected the rising trend line. If you connect all the major lows and it is also trading above its 200-day moving average. The recent correction that we have seen in this counter after testing the highs of 10,500 and odd, this correction I think is giving a good opportunity for fresh entry. At current level, it is placed tad above its 50-day moving average, which is placed at 88,700. And I think at current level, one can definitely initiate long position with a stop loss below 8,500 from a trading perspective. The upside is open for 9,500 to 10,000.
All right. Okay. What about Vedanta? We've been getting a lot of comments right now on Vedanta. If you could quickly tell us the view there.
If somebody wants to play metal space, I think Vedanta and Hindalco should be the two preferred bets. And Vedanta, although we may see some consolidation in a very short term, but if somebody has a positional perspective view, then definitely this counter can be added on decline for the upside levels of 300 plus. That is the short-term target that we can expect. And the stop loss should be placed below 245.
Okay, well, thanks for that. And thanks, guys, for writing to us. Nilesh, before we let you go, why don't you share your picks with our viewers?
Sure, Karuna. I have to buy recommendation. Realty sector is looking very promising. And in this sector, specifically two counters we are liking, that is Godrej Properties and Oberoi Realty. I would like to go with Oberoi Realty, where we have seen a major falling trend line has been taken off yesterday and a good price and volume breakout that we have seen. So definitely Oberoi Realty can be added at current level for the upside target of 1,070 to 1,100. The stop loss should be placed below 1,020. The other counter that we have already discussed is RT Industries. It's certainly looking very promising at current level. And overall chemical space, as I mentioned, is looking very convincing for the short-term upside. So RT Industries, one can go long for the upside target of 860 to 900. The stop loss should be placed below 822.
Okay, thanks Nilesh for that. So two buy calls, one on RT Industries and the other being Oberoi Realty. Thank you so much, Nilesh, and to our viewers for tuning in and for sending us your queries. Come back again on Monday. We'll try and address some more questions. But for now, that's all from us on Morning Trade. Thank you so much for watching.